All right. I wanted to talk with you a little bit today about disability insurance and how to shop for it. I keep seeing questions on the WCI subreddit, in the WCI Facebook group, on the WCI forum, and the title is almost always the same, right? Is my disability insurance offer good? And they post a screenshot or something of the offer they got from an agent, and and they're expecting somehow that the community is going to be able to look at that and say, oh, yeah, that's good. Well, that's not how you shop for disability insurance. You don't go talk to an agent, get an offer, post it on Reddit, and ask if it's good. That's not the way you shop for it. The way you shop for it is you go to an independent agent, somebody that can sell you a policy from all of the big 5 or 6 companies, and they help you to get the policy that's right for you. They're going to make about the same amount of commission no matter which policy you buy. Yes, they've got a conflict of interest, but that conflict of interest is mostly to get you to buy a bigger policy with more bells and whistles, right? And for the most part, the folks on our recommended list, they make plenty of money. They don't need to do that. They're in the education business mostly. They just want to teach you about these policies. They know you're going to buy one. They know they're going to make several $1,000s from selling it to you. And it doesn't really make that big of a difference if they make $4,300 or $4,600 from their commission for selling it to you. They don't care that much, right? They just want you to have the right policy because then you're happy with it and you refer your friends to them. But there is a right policy for you. And it depends on your state. It depends on your specialty. It depends on your gender. It depends on your health status. It might depend on your dangerous hobbies as well. And so the way you figure out which one's right for you is you look at all of them, right? Or have them do it for you and put them in front of you. And they can, educate you on the differences between the different policies. Maybe this one is a little more expensive, but look what it gives you that the other one doesn't. Is that worth another $30 a month to you? Those are the kind of questions you deal with going over these policies with them. And then together with them, now that you have the prices, now that you know what the policies include, you can make an educated decision of which one to buy. But there is no step in that program where you then go post it on the WCI forum and say, is my disability insurance offer any good? Because we have no idea. We don't know your health status. We don't even know your age most of the time, don't know your gender, might not even know what state you're in, right? And we don't have access to the software for each of those companies to tell you what the quote would be with principal. If all you did was go talk to Berkshire, or all you did was go talk to the Standard or whatever, chances are good that that's not the best policy for you, that it's one of the other 4 or 5 companies that has the best policy for you. And so if you've only looked at one, if you've only talked to an agent for one, you probably have the wrong one. Maybe you lucked out and got the right one, but you probably have the wrong one because you went through the process wrong. So that's how you buy disability insurance. And they'll talk to you about all the different riders, right? They're going to talk to you about a residual or partial disability rider. You should get that. Right? That's the one that covers you if you're partially disabled or when you're coming back from disability insurance. If you are offered a cost of living rider and you're relatively young, you're in residency or you're just out of residency, you're in your 30s, maybe even your 40s, get that rider, right? Because if you get disabled, you want that benefit to go up each year as you go through your career, right? You have bad inflation like 2022. You're not going to want that to happen very many years without an adjustment being made. If you're buying it at 56, it probably doesn't matter that much. This thing's only going to pay until you're 65 or 67 anyway. If you're buying it as a trainee, you're in residency or fellowship or whatever, you probably want a future purchase option rider of some kind that allows you to buy more insurance once you're making more without having to requalify. Even if you take up scuba diving, even if you develop a heart murmur, even if you have diabetes, you want to be able to still buy more insurance because you probably can't afford as much as you want. They probably won't even sell you as much as you want as a trainee. So if you're buying it during training, get a future purchase option. But the other riders, the retirement riders, the student loan riders, the catastrophic disability riders, those are kind of gimmicky. I would rather see you spend more money on a larger base benefit. Instead of getting $10,000 a month, maybe you get $12,500 a month instead of getting those riders, for instance. Now, how much do you need? You need enough to cover your living expenses and the way you want to live, right? Just barely way you can squeak by on discount groceries and never going on a trip, but the way you want to live, plus enough to save for retirement. Because remember, these things stop paying at age 65 or 67 or something. And if you haven't saved something for retirement along the way, you're going to be living on Social Security at that point. So this is expensive stuff. You get sticker shock usually when you buy it because it costs money, right? 2 to 6% or so of the amount of income that you protect. But if you need it, you'll be really glad you have it. It's pretty darn useful in the event that you lose your most valuable possession, which is your ability to turn your time into money at a very high rate, if you're like most white coat investors. And when you become financially independent, you can drop it and save those premiums. Let paying that premium every year motivate you to save a little bit more money to reach financial independence a little bit sooner.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.